And bear with me if the microphone isn't working. We're not an IT company, we're a cannabis company. My name is John Arbuthnot. I'm the CEO and co-founder of Delta 9 Cannabis. We are one of Canada's oldest, longest-running cannabis companies. We founded the company in 2012 with my father. We became Canada's fourth licensed cultivation company for medical purposes in December 2013. Subsequently licensed to sell in early 2014. From there, the early years of our business were fairly modest. Toward 2017, with an eye towards legalization of cannabis in Canada, became the growth phase for our business. 2017 marked our more aggressive growth strategy. We raised approximately $10 million throughout the year 2017, listed our shares on the Toronto Venture Exchange in November 2017 at 65 cents a share. We now trade under the symbol NINE in Canada, and in the United States we trade under the symbol VRNDF. Now since November 2017, the company's raised a little over $53 million through a mix of debt and equity. $41 million is equity through a mix of strategic private placements, as well bought deals through our lead investment bank, which is Canaccord Genuity. The $12 million is a credit facility funded by Canadian Western Bank, making us one of the first international cannabis companies to have access to conventional lending facilities at less than 4% interest. Delta 9 is now one of Canada's only vertically integrated cannabis companies, so we touch cultivation, processing, extraction, medical distribution, recreational distribution, retail, and we have a growing business-to-business segment. So if it's cannabis in Canada, we operate in those segments. We now employ a little over 300 full-time employees, based mainly out of our Winnipeg, Manitoba cultivation and extraction facility. Now on the cultivation side of the story, we have a very unique platform. So we're not your conventional greenhouse or large open warehouse play. We use smaller compartmentalized grow areas, which we call the Delta 9 Grow Pod. Effectively, they are retrofitted shipping containers. We take your standard 40-foot high cube shipping container. We install customized wall panels, electrical lighting and HVAC systems, and what we're left with is a unit that's modular, scalable, and stackable. So we grow on multiple floors within our warehouse. And you'll see it is quite the state-of-the-art grow environment once they are installed within the facility. Now, beyond looking cool, there is an actual application here that we feel is very beneficial. Really, our early years in experience in cultivation were that we needed to dial in the factors that most directly contribute to the product quality. So for cannabis cultivation, that's temperature, humidity, light intensity, parts per million, CO2 saturation. All of this is dialed in incredibly precisely within these grow pods, contributing to a high quality output product. Now beyond that, there's a built-in risk mitigation function. We've already heard the horror stories from some of the largest cannabis cultivators in the industry about crop loss. At the end of the day, this is an agricultural product. The product is susceptible to plant disease, to pests, and to crop failure. Putting it into smaller compartmentalized areas means that we're effectively mitigating the risk of crop loss by compartmentalizing the production facility. Now there's also an economic case to be made for these pods. Each one costs us approximately $25,000 in terms of the full conversion cost, and we'll put out over $300,000 a year in output product. Now because we're the manufacturer of these pods ourselves, we effectively remove any of the third-party profit motive in setting up a facility. We're expanding right now for about $78 a square foot. Industry average in Canada for purpose-built expansion is typically in excess of $300 a square foot. What this translates into for the investor is a better return on our capital investment from our cultivation business. Now, in terms of the overall scale, 2018 for our company became the real expansion year. We went from 15 of these modular grow pods up to 154. We completed our phase 1 expansion, bringing us up to 4,200 kilos in annual production capacity, or in dollar value, about $30 million a year, November 2018. So all of that is online and in production at this point. We are now underway on our phase 2 expansion, which will take place over the next 8 to 12 months, bringing us up to approximately 17,000 kilos per year, or about $150 million at wholesale. Our longer-term expansion plans that will be in place out through the end of 2022 will take us up to approximately 60,000 kilos per year, or approximately $500 million at wholesale. Now again, there's an economic case to how we grow from a production cost standpoint. And we're very fortunate to be based out of Manitoba, where we enjoy relatively cheap power, cheap labor, cheap warehouse space. These are the major cost centers for any licensed producer of cannabis. We also have a central geographic location, and for anyone in here who knows about Winnipeg, we have cold winters, which actually, from a production standpoint, are very beneficial. It decreases our cooling costs for our facility on our indoor grow. Now on the oils and extraction side of the business, we are currently licensed for production of cannabis oils by Health Canada at our Winnipeg-based facility. Over Q1 this year, we commercialized our first runs of oil-based products and submitted all of that evidence to Health Canada. We are pending approval for sales of our oil products, which we anticipate to come within the next quarter, which should act as a positive catalyst for the medical side of our business from a sales standpoint. We also have a strategic partnership with the Auxily Cannabis Group, which is a publicly traded cannabis company operating globally, where we supply input materials and they supply us with cannabis oils and extracts. We launched our first hemp beer last year on the lead-in to legalization in Canada on a partnership with Fort Garry Brewing, and we are working with a Colorado-based company called Nanosphere on a nano-encapsulation technology. Our strategy in terms of oils, extracts, value-added products is to produce some of these products in-house, to brand them as Delta 9, and also to work with some of the larger strategic partners throughout the industry. We also work with Tilray and Canopy Growth on oils development. We have a growing business-to-business segment. So as we started to ramp up our grow pod development, we actually found a number of businesses that wanted to purchase these pods from us. We worked with a company out of Brantford, Ontario, on the establishment of their facility over 2018. We supplied grow pods, we supplied licensing and consulting for their Health Canada license, we supplied them with Delta 9 genetics, and at the end of that application, it netted Delta 9 approximately $950,000 in revenue last year in a highly profitable unit. From there, we've hired on new heads of our business-to-business segment. We're expanding it out over this year. We are anticipating revenues of between $5 and $10 million from our B2B segment this year. Now on the medical cannabis side of the industry, we currently supply approximately 3,500 federally licensed patients across Canada. We do supply product to patients in every single province and territory across the country. Now this represented approximately $1 million in revenue for us last calendar year, which is a relatively small portion of our overall. We are continuing to add to our overall patient base, mostly through a Delta 9 branded clinic that we operate with physicians providing consulting services for patients. We also have a supply agreement with PharmaSave, which is Canada's largest chain of independent pharmacies, operating over 650 pharmacies across Western Canada. We are also in the process of EU GMP certification for our Canadian facility, as well as our oils rollout. We feel over the longer-term international markets that are opening up, we'll be pivoting to the medical side of the business before recreational. This gives us the opportunity for growth not only in the domestic market, but in international markets that allow for export as well. Now, the main drivers for growth for Delta 9 over last year, contributing to the vast majority of our revenue growth, were the cannabis adult use market and rollout in Canada for recreational cannabis last year. Our main supply agreements for our cultivation and wholesale business are in our home province of Manitoba, where we have a 2,300 kilo supply agreement, representing approximately $17 million a year in overall revenue. We have a 1,000 kilo agreement with the Auxily Cannabis Group, again to supply bulk wholesale materials for extraction purposes. And we have a 1,000 kilo agreement with Canopy Growth to supply Delta 9 branded materials for distribution through their provincial supply contracts. All told, this is anticipated to add approximately 30 to 40 million in top line revenue for the company over the next 12 months. And we're also vertically integrated. So we very much like participating up and down the value chain, as you can tell. For us, this has meant exploring retail opportunities in our home province through our Delta 9 Cannabis store, all under our overarching corporate brand. We feel there's a number of benefits to operating in the retail segment. We are very limited from a marketing and advertising standpoint in the Canadian market. And because of this, one of our few opportunities to actually market and brand our products comes in the retail platform. Being a retailer means that we not only are able to put our brand right in the community in a bricks and mortar standpoint, we also control the direct-to-consumer sales force. So we control the people who are actually talking to the consumers as they come into the stores and controlling that consumer narrative. We're also obviously recapturing the retail sales margin and not simply operating as an upstream, midstream, or downstream company, but operating as a truly vertically integrated company. As well, the analytics that we have been able to draw from our retail segment since the inception of legalization last year have been incredibly beneficial. We have now processed over 130,000 retail transactions since legalization last fall. And our retail segment produced more than $3.6 million in revenue over Q4 alone last year. That's operating only one store. Now, our St. Vital location was our first location to launch. It opened on October 17th, legalization day in Canada last year. Lineups around the block. We actually processed several thousand retail transactions on that one day. It turns out Canadians really like cannabis. Our next locations, and running into some supply issues from the overall Canadian market, we did push our opening of our Osborne Village and Brandon stores into late Q1. Both of those stores are open and running at full capacity now. You'll start to see those financial results coming in our Q2. And we are developing a fourth store in Thompson, Manitoba, which is planned to open late Q2 or early Q3. From there are expansion opportunities for us across the Canadian prairies as we look at opportunities in Manitoba, Saskatchewan, and Alberta, all provinces that allow for privatized and vertically integrated retail. Those will be our core markets over the next 12 months as we expand our retail chain. We'll just scroll through a few of the concept photos here, or sorry, not concept photos, I guess these are operating stores. As you can see, we wanted to provide people with a very clean, very well-lit retail environment. We met with our marketing team. We wanted them to take the Delta 9 branding and the Apple Store and give us a product platform that would be inviting to the broader consumer base. What we found is that our overall consumer demographic has leaned more towards the boomer category than what one would conceptualize as your average cannabis consumer. And with a growing number of our consumers more towards the health and wellness spectrum, using products that are non-smokable, so using the ingestible oils, using the gel caps. And I think that's a very exciting market opportunity for us to be really appealing to the older consumer category that has a little bit more discretionary income. In terms of the stock side, again, our shares are listed in Canada under the symbol NINE, and in the United States under VRNDF. We currently have approximately 85 million shares outstanding and 103 million on a fully diluted basis. The shares are trading in the area of $1.50 Canadian right now, giving us a market capitalization in the area of 140 million. Now, when we look at the Canadian market overall, typically we're seeing producers, we're seeing operators with very lofty valuations. Delta 9 trades at one of the lowest earnings multiples and revenue multiples of any Canadian cannabis company. Company posted approximately $950,000 in revenue in 2017. Last year with legalization, we posted $7.6 million. We've provided revenue guidance to our investors for our Q1, and we are targeting revenue in the area of $5.8 million just for Q1 this year. So aggressive top-line growth, really for investors looking for a story in Canada that is not overpriced, that is performing with a management team focused on execution. Delta 9 presents an attractive investment opportunity. And at this point, I would love to open up to the floor for questions. Sir?
You're saying you're going to get 60,000 kilos of production in a few years, but you've got these other guys that are doing a couple 100,000 now.
Yes and no. Planned capacity in Canada is in the area of 1 million kilos a year in terms of all of the companies that have announced. Now, when we look at Even the largest cannabis companies, they're still only producing in the area of 7,000 to 10,000 kilos a quarter. So a lot of the Canadian industry is still on kind of the leading edge of the curve. When we look at the Canadian market, and supply or oversupply is very much a concern. We look at established markets like Colorado, Washington. Typically, there is an oversupply scenario that comes in the first 3 to 5 years. We know this. How do we de-risk that? The way that we de-risk this is effectively, we want to land in the high margin segment. When we look at these oversupplied markets, we see the wholesale price for cannabis dropping through the floor. But when we go into the retail setting, we still see high quality products sold for $10, $20 a gram. It's really the high quality segment, and this comes back to our Delta 9 grow pods. If we can produce a high quality branded product, we can land in the high value segment. The other way that we de-risk this is by being vertically integrated. So in terms of operating as not only a cultivator, but an extractor, a wholesaler, and a retailer, we capture as much of the value chain as possible, meaning that when there is margin compression, and there will be, we will see the least of it from an overall operation standpoint.
What about expansion like to Europe or down to the States or something?
Yeah, so in terms of an international expansion strategy, and very good question, really we don't see a huge amount of value for our shareholders in investing in overseas facilities right now. We see a lot more value in licensing our Canadian facilities with EU GMP certification, effectively allowing us to export product. There's not a lot of value in having facilities that are spread all over the world, increasing the CapEx, diluting the shareholder. There's a lot more value in us building out a centralized production manufacturing facility and having that international certification to distribute all over the globe. So we are certainly exploring the international opportunities. I think it's still very early stage, mostly a medical product mix in terms of international distribution, but we are looking into those opportunities right now. Yes, sir.
Help understand the Canadian landscape on terms of supply and pricing for supply. I don't get it. Say, supply, you know, there's a supply shortage, so typically supply and demand prices would be going up. So producers could go to the say, hey, we're not selling it to you for $6 a gram. Not like it doesn't.
Yeah, so I mean, in terms of what we've seen, have seen since legalization, it has very much been that case. There has been a real supply shortage environment. Wholesale pricing right now, on average across the country, is in the area of $6 a gram. So producers, such as ourselves, producing for around $1.50 a gram, selling for $6, and there's a great margin there. Now, Delta 9, when we reported our Q4, actually had one of the highest industry average wholesale prices at around $8 a gram. Now, it stands to reason that over the long term, as the market becomes better supplied, we will see average wholesale pricing trend down. But at least over the near term, we are seeing fairly inflated overall wholesale prices.
Is the pricing set for the contracts to where you have to deliver it, you can't change it?
No, and all of our supply contracts are commitments from the company in terms of the overall supply quantity, but not with fixed pricing. So we can come to the market and effectively say, this is the market demand from a pricing standpoint right now. This is how we're going to be pricing our product. And again, that has translated into very high average wholesale pricing for Delta 9 over Q4 and into Q1. Yes, sir.
Can you share, do you have any U.S. expansion plans?
So unfortunately, U.S. markets, as they are federally illegal currently, as well as a Toronto Stock Exchange listed company, we are prohibited from operating in the United States. Now, the moment that these markets do open up from an opportunity standpoint, we will be looking to pivot to the United States markets, again around a vertical integration strategy with centralized production, distribution through to retail. And this is where I feel personally we have a real advantage in having conventional lending facilities, having pre-established relationships with international banks. I can go to my bank and get a credit facility that again is bearing an interest rate in the area of 4%. So when we target expansion, we're not necessarily diluting the shareholders, and we can pivot quickly to these international markets as they open up. But again, we're fairly early stage for the company, 900,000 revenue, 2017, 7.6 million last year. 2019, 2020 become the real growth years for us, and I think establish us as a player that can go international. Yes, sir.
Why were you able to get mention the $8 approval? Why were you able to do that?
Well, I think it really speaks to the premium quality of the product. Again, when we look to land in the kind of better, best, or premium categories, these are products that are selling in retail anywhere from $12 to $16 a gram. So very high quality from a dried flower standpoint. And really from a branding standpoint, again, we try to position our products not really compromising on the pricing as a way to make the statement to the consumer that this is a quality product, it demands a high price point.
How does our provinces or the Health Canada determine what product falls into those categories?
You know what, it's up to the consumer. And really from there, it is about having the premium product displayed within our storefronts. You would see in our stores, we offer a sensory experience for consumers. So we actually take the product out of the very bland and sterile Health Canada regulated packaging. We put it on display for people. And that's where, again, when we're communicating the narrative around these products with our direct-to-consumer sales force, we can tell people the story about these products. And overall, that demands higher pricing. Yes, sir.
After you've grown the cannabis, you have people test it and make sure that it's good stuff. How do you know?
No, what? Yeah, are you applying for the position? No, when we talk stringent quality assurance and quality control in Canada, we're not typically talking about a testing team. Now, as we have rolled out the adult use and recreational use market, yes, we do have people in our retail division who sample the products. Really, it's to give them a good sense of how to sell this product to the consumer. But again, from a quality assurance, quality control standpoint, this comes with standardized laboratory-style production and then really standardized testing methodologies for everything from potency, moisture content, heavy metals, pesticides, the whole whack.
Yeah, is your company part of any of the cannabis ETFs?
We are a part of the Horizon Marijuana Index ETF as well, the Horizon, I believe it's the Medical Marijuana ETF.
Sort of greater efficiency odds versus.
Yeah, so interesting commentary around efficiency for these overall facilities. You'll often see announcements around a 1 million square foot facility. But the reality is that that facility is actually only producing a few 100,000 square feet of flowering canopy. Because we grow on multiple floors within our facility and using the stackable grow pods, so our phase 1 expansion was 40,000 square feet. In that 40,000 square feet, we actually have 42,000 square feet of flowering output capacity. So when we announce square footage, and overall this expansion will be 480,000 square feet, it is the most efficient use of that overall productive capacity that you can find in the cannabis space. Now again, the state-of-the-art orientation of the facilities can lead to higher overall costs, so we will never be the 50 cent a gram greenhouse producers, but overall last quarter coming in around $1.50. When we project our longer-term production cost per gram, we're going to see that more in the area of $1 a gram. So very competitive, again, from an overall high-quality standpoint. Yes, sir?
What is the significance of the name Delta 9?
Good question. So the main psychoactive ingredient in cannabis is Delta 9 tetrahydrocannabinol, but that was a mouthful, so Delta 9. Well, that's our business-to-business segment. So actually, we did make our first shipment of a Delta 9 grow pod to a facility in Michigan. That was a week or two ago. So in terms of international exposure, we can't sell cannabis genetics. We can't sell cannabis products into the United States, but we can sell our grow pods.
Do you sell the technology behind it?
I'm sorry?
Do you offer the technology of how to grow within that?
Essentially a turnkey production platform. So a lot of the uncertainty becomes removed. We supply the hydroponic systems. We make it easy and we make it a known input. And you know what the best part about us selling these pods is we're not approaching it as an equipment salesman. We're approaching it as the company that actually uses the growing platform ourselves. So we bring people out to our facility. We say, we'll give you the credit for that one, sir.
Are you the only one using growing pods?
There are one or two other companies in North America that produce similar platforms, and there are several companies producing modular grow systems, so we're not the only ones, but we do have Canadian and US patents for retrofitted shipping containers, i.e. grow pods in Canada and the United States. And very unique in terms of scale. I've seen facilities with maybe 5 or 10 of these units, operating multiple hundreds of them now. We've brought this to a scale that other facilities just have not.
How much did you say, you already went over this, how much did you say it cost for the container then to build it out? What was your total cost? How that versus these other guys that are doing it?
So each grow pod in terms of full conversion installed within the facility is around 25,000 Canadian. We sell them for in the area of 50 to 100,000 Canadian, depending on how customized the units are, or whether they just want one off the production line. From there, we can produce approximately $300,000 a year worth of dollar value output products. So again, very high return on that CapEx, and that's not something you're going to see at a lot of these facilities.
Where does the company stand right now as far as the balance sheet and cash?
Good question. So as of the end of last year, company had approximately $22 million in working capital on the balance sheet. As well, we have about $7 million in an undrawn credit facility of that $12 million facility. So very healthy balance sheet. The only debt is, again, from Canadian Western Banks, so bearing a very low interest rate. Overall, very healthy debt to equity mix. And as the company expands, management actually owns approximately 50% of the outstanding shares. So we're very aligned with the shareholder. We look to prevent dilution to the fullest extent possible, find a very healthy debt to equity mix as we expand. Folks, thank you for your time today. We are at booth 513 for the next few days. If you have any follow-on questions, our investor relations team is here to answer any that you may have. Thank you.